Hey there, everybody. It's Greg Gossett from Gossett Trading and Mentoring Live, and today is April 26, 2019. We are in the last hour of the market. This is the hour, in my opinion, that's the most important hour of the entire trading day. I believe that this is the hour where the smart money and the professionals move the close to the appropriate price compared to the action in the morning, where I feel like there's a lot more amateurs and not as smart money moving the market around impulsively on news after night and so forth. So I like to call it the lie detector hour of the market. So anyway, I appreciate everyone tuning in today. It's nice to have you here. I've noticed that we've had several people that come every day now, and that's great. That was my intent of starting the channel, was to build a group of viewers, to help them understand what trading is about and to use some good principles of trading. So today, the format, first of all, I'm going to have to run the U.S. government required disclaimer. That's about 40 seconds. And then when we come back from that, we are going to take a look at the major market indexes, kind of big picture, and see what's going on there. And then we're going to look at my current positions. I'm going to tell you why I purchased them. When I purchased them and why I purchased them, and how I'm going to manage the positions going forward. And then we're going to turn to my watch list, and we're going to go through each one, and we're going to look and see if there are any possible trades for this afternoon at the close. So that's the plan. Oh, and then lastly, if you have any questions about anything that I discuss during this hour, keep in mind or write them down, and I'm happy to answer any questions after the market closes, or if you'd like to take a look at any symbols, and I can give you my humble opinion on the strength of those charts. So anyway, first of all, let's go ahead and run the U.S. government required disclaimer. It's about 40 seconds, so bear with me, and then I'll come right back. Okay, talking just 40 seconds.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okay, good. We got that out of the way. So let's right away turn to the charts. First of all, let's take a look at the Dow today. The Dow is currently up 28 points. We have had trouble with this third ATR channel up here in the high RSI readings. We've come off a little bit. We bounced to the 20-day, so that is good. We were down lower today and reversed back up. So anyway, it's it's kind of neutral right here. So not as overbought as the other indexes. The Qs did go down today. Looks like we got close to the 10-day moving average. Still above a 77 RSI, and at the third ATR channel, above the third ATR channel, which is, it's difficult to get something to, especially an index, to close above the third ATR channel. So it is very strong. And then let's take a look at the SPY. SPY was down earlier today. It looks like it's closing above the 1 ATR channel, 71.64 RSI. So as long as these indexes stay above 70, that's bullish for the market. I believe if they were to close under a 70 RSI, we might see it go sideways or even down. So, okay, first of all, let's go ahead and take a look at my current positions. So this is Dexcom. We bought Dexcom back on April 18th, and the reason I bought it was 3 reasons. You see this previous range here. See how we moved sideways, we attempted to go up, we came back down, but then we made a lower low. We broke out into a new range to the downside from the previous. So I mean, that is a bearish signal, but what I liked about it was we made a low, we made a lower low, but the MACD lines continued to stay green, which showed that this bottom here, this lower low, did not have the momentum as the first low. So that in general was a good setup for the context of the chart. And then we were also under a 30 RSI. Then we went back up. So, and then this bar here washed out the low of this previous bar here and then closed above the close of the previous bar. So we have a double bottom with a bullish divergence. We have a V1 entry, and we also went from under 30 over 30, and that all happened in one day. And that is why that's why I chose the trade. So you can see today I've hit 2 profit targets, almost a third. It's within possible striking distance. It's hard to hit 3 profit targets. So this is done very well. From entry, this is currently up 7.69%. So it's a nice trade, right? Now, currently we're at 5230 RSI. I'm certainly not going to let it go all the way back down to my entry. Again, I've been phasing out. As of right now, I think I'm out of about 70% of this trade because I always like to phase on the way out. My next, I'll be moving my profit target up here, and currently we're at 5236 RSI. If it closes below the 50 today, I will go ahead and just lock in all the profits. If it closes above 52, then I will be using the 50 as my trailing stop to the bottom, the 50 RSI. So if today it closes above 50 and then Monday it closes below 50, that will also be a clue for me to just go ahead and lock in my profits. If it keeps going, I will continue to phase out until I am out of the trade entirely. So this has been a great trade, over 7%. And the reason why: double bottom, bullish divergence, V1 entry. We broke out to a new range. It was false breakout and return. So anyway, just a wonderful trade. Etsy. So I bought Etsy yesterday here. I was thinking about buying it here when it tested this 50 and closed back below, but I decided not to because it didn't close above a 50 RSI. So obviously I had to pay a higher price for it yesterday, and I only bought a half position yesterday. I was hoping that it would close lower down here in this range sometime today, and if it does, if it closes about in this range, I'll go ahead and add my second half of my position to reduce my cost basis and give me a better risk to reward ratio, because currently my risk to reward ratio is this 50-day moving average. That would be my initial stop, and because it was extended quite a bit, I didn't want to take a full position. So if it closes about halfway of this bar here today, I will add the second position and then use the 50-day as my stop. If it continues up, I'll just be happy that I have a half position. SPY, as most of you know, I do purchase the SPY every night. And then I sell it first thing in the morning. You can see I purchased it there. This was, almost a scratch trade. I think I lost, 15 cents or something on it. But what I want to point out is, and let me pull this up, but a lot of you have seen this, so sorry for the redundancy, but since 1993, if you would have bought SPY on the open in the morning and sold on the close each day, you would have had a negative return of 5.2%. But if you did the opposite and bought on the close in the afternoon and sold first thing in the morning the next day, the return would have been 568%, meaning more than all performance of the SPY came in after hours trading. And I wanted to point this out. I've been keeping perfect records of this. I started this in February 26th. And I've done it with 100 shares each night, just an even 100 shares, just so I could do a test. And you can see the SPY from here up till today is up 5.16%. That's 14.35 points. Now, when I look at my records, I've made almost exactly that, about $1,400. So I've made 14 points just on the buy at the close, sell on the open. So almost identical, but look what you had to go through by buying and holding that. I mean, you had to go through some dips. You had to go through some pain. I mean, not too bad because it's gone straight up, but mine was very efficient. Just buy at night, sell in the morning, and without having to go through these swings, almost identical, I made the exact same amount of money. So I had someone email me today, ask me about this, and he said, is it just doing well in the last 39, 40 days because the market's up? Well, yeah, for sure. I mean, that helps. I mean, if we would have tested this in the last 3 months, the last quarter of 2018, I'm certain it would have been down. But I think we have to take a look at this in the big picture, and you can see it has not gone straight up. This is since 1993. There have been drawdowns. There have been some pretty serious drawdowns. So, nothing's going to work all the time, but I do like the data back from 1993 showing that the gains do come majority of the time. Well, actually not a majority, in this test, all of them, because if you would have done the opposite and bought in the morning and sold and closed, you actually would have been down. So anyway, the particular trade that I made yesterday, like I said, we bought it here, sold it here. I think it was a 12 cent loss. So I will be buying it again today. So TLT. I bought TLT here on the 24th. And I bought it. I was hoping that it would close below the 50 and then close back above to give me a better entry point. But if you can't get it to the bottom, you have to wait for something to get you in momentum wise on the upside. And I bought this because we had a fractal here. Here's a high, 2 lower highs to the right, 2 lower highs to the left, 2 lower highs to the right. This was a big strong bar, closed over 50 RSI, closed over all the major moving averages. I bought that at the close. Yesterday it was down just a little bit, but today I've hit 2 profit targets. I set my profit target here and here, but of course this gapped up here, so I actually got filled both there. But that was my, sometimes, you get some positive slippage here when it gaps your way. So anyway, it's nice that I hit 2 profit targets on this. It's a 55.27 RSI. How am I going to manage this trade in the future? I believe Monday, if it goes down, makes a lower high and a lower low, I would think about getting out. This is a tough one to speculate on. I'm just going to have to see how the price action is, but obviously if it continues to move up, I'll just continue to scale, move up, and then move my stop up accordingly. If you wanted to give this some room to breathe, you could play back down to the 20, but I don't think I want to go all the way back down there. So probably a close below this bar here would get me out. But nonetheless, it's been a nice profitable trade. We hit 2 profit targets today, and that's great. All right, VIX. All right, so VIX went against me. I bought it here on Wednesday, but this big bar yesterday luckily got me out of 36% of this trade because I always phase and I hit 3 profit targets on the way up. So it reduces how many shares I have. So today does not hurt as much, right? So all in all, I'm probably break even on this trade just because I scaled out of 36% of the position yesterday at much higher highs I bought here. So a little down on the trade. It's 35.14 RSI. I'm going to continue to hold this unless we have a close below the 30 RSI. All right, XLRE real estate. I bought this here when we closed below the 50 and then we closed back above the 50. And in addition to that, we had a V2 entry, which means here's day 1, day 2, day 3. Day 2 washed out the bottom of day 1, and then day 3 closed above the close of day 1, giving it this V pattern. So that pattern just by itself is good, but what's also good is that we close below the 50, close back above the 50, giving me a double confirmation of the trade. And as you can see, it's moved up our way nicely today. I did hit 1 profit target. I think I took 1 profit target, 1 or 2 profit targets here now, I can't remember, and then 1 today. So I'm out a minimum of 20% to 30% of this trade so far. It's at a 52.82 RSI. So, I purchased it here. My trailing stop right now would be a close below the 20-day moving average and or a close below the 50 RSI because it came from under the 50 up to the 50. Now, if it loses that 50, I will just go ahead and lock in. But not a bad move for 3 days, right? So that is what I have today. So Dexcom, get up there, baby. Get up to that 3rd profit target. If this closes below 50, I'm out. Etsy, I'm actually waiting for it to come back in a little further down so I can add a full position. SPY, I'll be buying that at the end of the day. TLT looks fine right now. Most of the, if it closed below 50 today, I would have to get out, but I doubt it will, but we'll watch it. But Monday, if it closes below this low, I'll just go ahead, be glad that I locked in the profits that I did, and just get out. VIX, I'm waiting for a close below 30. And XLRE, if it closes below 52, I will be out. All right. Makes sense? Okay. Yep, Bruce, S&P opened flat. I think it opened down like 12 cents. I think it opened up down 12 cents. So, all right. Let's take a look at the stocks of the day and see if we can find something to buy at the end of the day. Let's start with Apple. All right, so Apple has lost its 70 RSI. I think we talked about this. If it moved up, it was above 70 and then it closes below 70. If I were long, that would give me a reason to get out. And if it closed here right now at 67.82, if I were long, I would get out. It'd be interesting to see what the market does. We have earnings coming up on the 30th. I think that's Tuesday. So nothing on Apple. Amgen, it's had a big move down. It's just building a base. So there's no interest for me on Amgen. Amazon up big. Boy, it was down earlier, reversed back up. It's a 76.27 RSI. Just amazing. But too high for me, the risk to reward on Amazon. I would need Amazon to actually, I would want to see it get back down to the 20-day moving average, have a V1, V2 entry trigger to trigger me back in, and hopefully have a swing back to the top. But who knows if it will even get there? Maybe it'll just keep on going. Might go to 2,000. It's a big round number that might attract that. All right, Boeing. We had a big bar up yesterday. I was waiting for this to trigger this fractal. This is the fractal point with two lower lows to the two lower highs to the left, two lower highs to the right. I think for me, and to get interested in this, I would at least have to break out of this previous range. So currently, right now, I'm not interested in this until it closes back above, and or on the downside, if we can test this 100-day moving average, close below, go back above, that would be a dip buy. So it either has to move higher or lower for me to get interested in Boeing. Alibaba has just been moving sideways. We had a big bar yesterday, but it tried to go up today, was not able to break above there, but who knows? We still have some time in the market, but I'm not interested in buying this right now. But the positive thing is that we have bounced off of this 20-day moving average 3 times. So this is the clear line of support. All right, so Caterpillar, yep, 12 cents, Bruce. So Caterpillar, this is a tough one. We have had a nice move up. We got beat up a little bit on earnings. Yesterday, it rejected the 50-day, has moved up today. It is a V2. Here's day 1, 2, and 3. Day 2 takes out day 1, and day 3 needs to close above the close of day 1. But what concerns me about this chart is, in order for these V1s, V2s to be legitimate, you really don't want the bars to be larger than 1 ATR. See, this is the distance of 1 ATR. And you can see this bar, actually it's from here because that's where it closed. This bar is, I think, over 2 ATRs. So I'm not going to buy this. I mean, it wouldn't be the worst trade in the world. It certainly could. I just feel like there's a lot of sellers up here because it was a big dump, and I don't like the slope of that line. It'd be better if it, just kind of made its way down nice for a bounce. But when you have these big down moves, in my experience, it's less likely that you're going to go right back up. So I'm going to let this one go. Ideally, maybe we come back down, test the 50-day moving average, and then move up from there and have a higher low from this low. Higher lows are always better than lower lows. So I'm going to let that one go as well. Canopy growth, boy, we shot up, moved sideways, consolidated, moved back up again. It's a 66.53 RSI. Just too high for me to buy. I would probably buy a dip down here at the 50 or the 20. The Dow Jones we talked about. It went, I don't think it ever got to 70 RSI, but the combination of the 70 RSI and the third ATR channel is what is where it really ran into resistance. So for me to get interested in the Dow, I would need a close below the 20, close back above the 20 at the very least. Hey, there's Dexcom, very close to hitting our profit target. So boy, that's great. That was a wonderful trade.
What a film.
So anyway, again, if this closes below 50 RSI today, I'm going to go ahead and just lock in the entire move. But yeah, I think that's over a 7% move. Pretty good. 1, 2, 3, 4, 5 days. So very happy with that. We have earnings next week. So even if it continues to move up, I'll hold it, but I certainly will get out of it before earnings. eBay gapped up after earnings. It is just moving sideways at the moment. No interest there for sure. Etsy, we discussed. I have that. I'm looking to see a close back into this range to add my second half of my trade. I mean, this is positive. This large bar is a positive move. So, if it hangs within the halfway of this bar, there's no damage done to the chart. It would just give me a better opportunity to add my second half. So But if I don't add the second half and it continues, then that's still great, right? Oh. So Facebook, we gapped up strongly on earnings. What's a little concerning to me is that the price action was not able to hold the low of the gap up day, gap from here to here. This is the low. It would have been healthier if it could have stayed within this range, possibly moved sideways and then moved up. But today it actually took out the low of the gap up day, which is somewhat technically significant. So for me to get involved in Facebook, probably all the way down here to the 20 is where I would be looking, or possibly here at the gap up, the high of the gap up day to the downside. So, but as is right now, I'm not interested in Facebook. 5 below is continuing to move up. Boy, what a move. What a move. So I would definitely need some kind of pullback in order to get this. And when I mean pullback, probably within the value range, which is I consider the 1 ATR channel and the -1 ATR channel, or possibly the 20-day moving average. But right here, just the risk or reward doesn't make sense to enter here. More likely it's going to go up than down. But how much it goes up compared to how much it could go down, that's the concern. So no interest on 5. This is the Swiss franc. Oh, just give me 1 second here. Okay. Okay, so the Swiss franc did find somewhat of a bottom down here, moving sideways a little bit up today, but nothing about that tells me that that is the bottom. In order for me to get involved here, I need a rally, probably at least back up to the 20, and then a test of this bottom, ideally with a bullish divergence, but right now this is probably just a little bit of a dead cat bounce. Boy, GE, this is a tough one because I do like this chart pattern very much. We make a lower low here, we have a rally, we come back down, we close below the 100, and it's a higher low than the previous, and then it moves up strong. And I'm not surprised it moves up strong. And also the MACD went positive. It's having a little bit of a struggle with the 50 RSI, but all in all, this is good. It's a V2. Here's day 1. Day 2 washes out day 1. Day 3 takes out the close of the day 1 close, and we trigger a fractal. We're over the 50 moving average, the 20 moving average. The only thing that concerns me is that earnings are Tuesday before the market, meaning that this is literally only a 1-day trade. If I buy it today, I have to sell it Monday afternoon because of earnings. So we'll mark it, and we'll swing back around. Gold has had a nice rally off of the bottom. Looks like it's struggling a little bit with the 50 RSI. Really, for me to get interested in this, I would have to have a 5 to 20-day cross, moving average crossover, and that's probably going to be a while. Or coming back, testing this bottom, potentially having a bullish divergence, or even if it came back down and then had a V1, a higher low V1 to the upside. But currently right now, the people that bought here, they are keying off of this 50 RSI, and if it doesn't hold, the people that bought here will sell here. That's just how it works. That's exactly how I would do it. If I bought a lower low, I would be looking to sell on that first rally, and that would cause the price to come back down. But if it comes back down and holds and then can move up, that's very positive because the people that bought here, sold here, now they're out of the equation, so you don't have as much selling pressure moving forward. Google is just moving on up. Looks like it's kind of found some resistance up here. It has closed above the 3rd ATR channel. That is always positive. Yep, Bruce, earnings are coming Tuesday morning on GE. That's what concerns me. So great trade. I hope you guys are all in Google. Earnings are coming up on Monday afternoon, it looks like. So anyway, there's nothing interesting for me here on Google. Goldman Sachs rejected the 200-day. In order for me to get interested in Goldman Sachs to the downside, I would have to have a close below the 50 and then back over to the upside, possibly a close back above the 200. So those would be my two options there. HCA had a big down day. It's rallied, but again, the people that bought here or lucky enough to buy here are looking to sell in this range if it falters, and that would cause it to move down. And if it continues up, they'll hold, and so you won't have the selling pressure. But for me to be interested in HCA, another visitation down to the previous lows. IBB had that big sell-off, just moving sidewards. Boy, Intel. You know, this is a perfect example, everyone, why you should not gamble through earnings. I mean, that's almost a 10% loss in one day gambling on earnings. Now, does that provide an opportunity for us? Well, it kind of does. You know, a great setup is when you have the confluence of a 30 RSI at the same time you have a 100-day moving average. Doesn't happen often, but you can see we're getting close to that. Now, you know, would it be legitimate for me to buy here and just use the 100-day as my stop? Yeah, it would. But my gut tells me that we've had this big down day. I think it's very likely that we can have some follow through on Monday, and that we might go down below the 100-day. So I think the better trade on this is just to wait, see if we go down below the 100-day, or actually even lose the 30 RSI, reverse and come back up, giving us some confirmation that people didn't want to sell down here, or giving us confirmation that they did want to sell down there and not to buy it. So if it continues to move down and then reverses back up, I will buy it, use the 100-day as my initial stop. If it continues to go down, does not reverse, I'll look for the same thing at the 200-day moving average. But again, just a good reason not to get involved with earnings. The Russell is having a good day today. Yeah, I don't think I'm gonna get involved here. I mean, it's not bad. It's a 58.84 RSI. It's not really overbought. But you know, if you look in the recent past, you look at these previous highs, it has had difficulty with that. So I'm gonna go ahead and I'm just gonna let this one go. Johnson & Johnson, just a big mess here ever since earnings. Coca-Cola. I did buy Coke back here on the 9th of April. The reason I did is because in the previous days we tested, see how many times we tested under the 200-day, and it just didn't want to go and close down there. And then on the day that I bought it, you know, we had a big bar. We took out the highs of these three previous days, four days. We also closed above the 50-day moving average. MACD was positive. RSI was not overbought. So I did buy it here, and I wrote it all. Oh yeah. I bought it here and I phased out until here. And the reason I sold out here was because we had earnings the next day, and I never hold through earnings. So it was a nice trade, but currently where it's at right now, it's just range bound within this big bar. And a 70 RSI, so I'm not involved in getting interested in getting involved in that. Lockheed Martin, I did buy it here when we closed below the 200, closed back above the 200, had a nice trade, phased out here, phased out to here, and then we had earnings and it moved up. But it would have been nice to hold through earnings, but I didn't. But still was a nice trade from here to here is where I phased. But nothing interesting in that for me right now. MasterCard, looks like we have earnings coming up next week. This has been a great strong move, but the readings are just too high here at a 70 7 RSI. There's just not a good risk reward. I would need MasterCard to probably come back down to the 20-day moving average and look for some kind of V1, V2 to trigger me in. Another reason, another example of why not to buy in front of earnings. 3M just got clobbered. In order for me to get interested in 3M here, I literally would have to have a close back above the 100, the 200, or a close back above the 30 also. But this is a lot of damage here. This chart's broken. Philip Morris did close below the 100 yesterday and now close back above. It's a 39.36 RSI, so almost a 40 RSI. If I were to buy this here, I would be targeting the 50 RSI, which is about 10 points away. And my stop would be a close below the 100-day moving average. So to me, right here, it's just a one-to-one risk to reward. So it's not good enough for me to get involved. Merck, I did buy this here on the 18th of April when we went down below the 200, closed back above. And we are also at the 6th ATR channel. Price tends to find support on the 6th ATR channel to the downside, and it tends to find resistance on the 6th ATR channel to the upside. So this was a convergence of testing the 200. People didn't want to sell anymore below that, and so I bought it here, and I actually sold it here. It was just a couple-day trade, and the reason I sold it, it went from under 30 up to 30, lost the 30, so I decided to go ahead and just lock it in. It's moved up since then, which is great, but I wasn't involved. So we have earnings coming up. Next stop for me to be interested in Merck would be probably another close below and close back above the 200-day moving average. Okay, Microsoft. Gapped up on earnings. It's holding the gap, which is positive. It's 84 RSI. So I am not interested in Microsoft. Again, I would probably have, first place I would be interested in Microsoft would be back down here somewhere in the value zone around the 20-day moving average. Netflix had a nice move up, gave them a lot of it back. Now we've rallied back up. Don't know if it's going to go back up and test that. It very well might. But yeah, I'm not interested here. Nike, I did buy this back here on the 12th, and the reason I did is because we took out the high of this fractal, and again, a fractal has two lower highs to the right, two lower highs to the left. It was a nice strong bar that took out the fractal, took out this range. MACD went positive at the time of that. RSI was not overbought. It was in the 50s. That's why I bought that. And so I kept it all the way to here. And the reason I got out here was because intraday we went above 70 RSI, and then we closed below, and that was my entry point. But that was a beautiful trade, right? I mean, just moved on up. I scaled, locked in. So right now, it's not doing anything really but moving sidewards. In order for me to get involved in this, probably the 50-day moving average, a dip back down to the 50-day moving average would be probably the most likely entry for me to get involved in this again. Philip Morris, up today, but still inside this big range, not interested there. PayPal, you know, good day today, but just too high. The Qs we talked about, just too high. Silver looks like it's closing above the 200, which is good, but we came from a lower low. So in order for me to really get interested in silver, I would need it to close back above the 200, then back over, making the lower high from the previous low, and or the 5-day moving average EMA crossing over the 20-day EMA, because that's a good, profitable, back-tested approach to trading silver. So right here, right now, it is over the 200, which is good, but it's coming from a lower low, which I don't like. The SPY we discussed, it's moving up. It's still a 71.84 RSI, and we're up against the third ATR channel, so that's not very interesting for me, although I will be buying it at the end of the day. Square, Did bounce at the 100, but it's not been able to be strong enough to close above the 200. AT&T, we talked about AT&T yesterday. I was considering buying it, but it closed 1 penny below the 200-day. So I did not enter it. It has moved. That would have been a good move, but it didn't follow my rules. Now we're at a 42 RSI, meaning that my profit target would probably be in the 50 RSI range, and my stop would be back down here. So currently, right as it is right now, I do not like the risk to reward ratio. Ideally, it goes up a little bit, comes back down, closes below the 200, and then moves up on a higher low. This is a lower low, and buying lower lows. I do it sometimes if a lot of things line up, but in this one, because of this big down move, it concerns me. So I'm just going to let this go. TLT is bonds. We talked about that. I bought this when we broke above this fractal range back into the channel. We closed above all the moving averages, and today I have hit 2 profit targets. So this is looking pretty good. Tesla, boy, oh boy. We have a 2838 RSI. For me to get interested in Tesla at this point, just give me 1 second. The very least on Tesla, I would have to at least have the price close back above the 30 for me to get involved. But if it closes back above 30, then I can use the 30 below me for a tight stop. But right here, it's a 28.36. I just wouldn't be buying that. Boy, that's really gotten beaten up, hasn't it? Natural gas has had a nice move off the bottom. I did say yesterday that I thought, in the near future, natural gas probably is going to tend to go up, but I didn't buy this. Wish I would have. But I would like to see this go up to the 20-day moving average, work its way back down, try to make a V1 higher low entry to the upside, or do a double bottom test and look for a bullish divergence. United Healthcare Group moved down, has rallied, became indecisive. A lot of people that bought here were possibly looking to see which way the wind was blowing on this, and if it would have headed down, they would have gotten out, which would have drove the price down more. But now it's, did a V, moved sideways, moved up, MACD has turned positive. I am not going to buy this because it's a 49.16 RSI, and when you come from under the 50 up to the 50, that is like a glass ceiling of resistance. So for me to really get interested in UNH, at this point I would be buying a retest of the bottom with a divergence. I can already tell if it does come back down here, we will have a divergence. So it's important to be patient, wait for the setups, look at these and go, okay, if it does this in a week or 10 days or however long, that would be a good formation to buy. I think if you start doing that, it's really going to improve your trading. But just like I'm saying out loud, okay, nothing here for me now, but if it comes back down to here, has a double bottom, has a divergence, that's where I would be interested in taking a position. Then if it does, then take it. Oil got hammered today. I would be looking possibly a close below the 200 back over. But actually, if we move back down to the 50-day moving average, I think that would be a better risk to reward, because this is an upward sloping 50-day moving average, and this is a 200-day moving average. But we'll see what happens. Okay, the dollar has had a nice move up. It has consolidated here. Really nothing for me to buy there other than if we had to close back to the 20-day moving average. Maybe the 10. Kind of a good example here is that, oops. See this previous high? Well, this is going to act as resistance until you break through it. Now that we've broken through it, this previous resistance should act act as support. So I would be waiting for it to, if it comes back down here, this is kind of intrinsically going to give it to some support. And if this support lines up with a moving average at the same time, then you have a confluence of signals. So let's see what happens down in here. So again, print out this chart, write it down, make a note to yourself, watch for a convergence of the previous high that was support, now resistance, now acting as support. At the same time, it lines up like maybe with the 20-day. So that's what I would be waiting for. It's important not to get impatient and try to force a trade. It's important to look at it, plan it out, and wait for it. Visa broke out. It's a 73.65 RSI. It's just too high for me to buy here. The VIX, we discussed that. I did buy this yesterday when we closed from under the 38 TR channel, above the 38 TR channel, along with the V2. See how day 2 takes out the low of day 1, and then day 3 takes out the close of day 1. Then I did scale out of 36% yesterday on this nice move up. I hit 3 profit targets. Did come down today, but locking in the profit targets yesterday really helps with the move down today, because you don't have as much and you lock some up at a higher price. In order for me to get out of this trade here, probably a close below the 30-day RSI or breaking out to the downside of this previous range. Verizon, well, on the plus side, we did close below the 100-day moving average, closed back up. I don't like it so much that this is a downward sloping 100-day moving average, and we're already to 40 RSI. Most likely we're going to get up to a 50 RSI and find some resistance here. Probably the risk to reward works, but I'm just a little concerned about these big bars, so I am going to let that one go as well. Energy. I did buy energy here, a half position when we broke out above that previous fractal. In the next 2 days, it got me out, and I'm really glad that I have a half position. But the point that I want to make here is that good thing I adhered to my stop, right? I mean, look what would have happened if I would have said, well, I think it, give it a couple more days. Yeah. So, when you establish a stop, just get out when it hits. Don't think about it. Just make it automatic. Just because if you would have not held your stop, got out of your stop here, this would have just been so brutal, both financially and emotionally, because you knew you were supposed to get out there. Okay, consumer staples. We talked about this yesterday, how it's had this nice move. It's kind of had this nice orderly move back into value. I was hoping it would come down one more day and I could get some kind of V1 or V2 in this range, but it did trigger a V2. You see how we have day 1, day 2, day 3. Day 2 takes out day 1, and day 3 is now above the close of day 1, but it's a 66 RSI. I would rather have it happen down here and or under a 60 RSI, somewhere between 50 and 60 RSI. Real estate, we do have this. I bought this because it closed below the 50, above the 50, and it also had a V2. Day 1, day 2, day 3. So two signals coming at the same time: rejection of the 50 and a V1 trigger to the upside. So this has worked out well. Did get 1 profit target today. So currently, if this closes below probably the 10-day moving average, 10 or 20-day moving average, I will go ahead and just lock in profits, or if it closes below the 50-day moving average. So anyway, looks like it's good right here. Healthcare, we did have that big move down when Bernie Sanders came out and talked about insurance and healthcare. We have recovered from that. It's concerning to me at this point because we've gone low. We're back up close to the 50 RSI. The people that bought here are keying off of that 50, and if we lose the 50, they will get out. They will lock in their profits from buying down here. If it continues up, then they will most likely continue in the trade. But if it tests a 50 RSI and then fails, they will get out, and that will cause some downside pressure. and then maybe we can pick it back up when it challenges this previous low. Transportations got really beat up yesterday after the earnings of UPS. We did make an attempted rally back today, but what concerns me about this is that you have this big, strong down day yesterday. Now, today we have made an attempt to rally, but surprise, surprise, we only came to about halfway of that big bar. When you have a big bar down, a lot of times you will get a test of the halfway of that big bar. And if you have a big up day, a lot of times it will come back down to the halfway point and it will find some support there. So this is concerning. A lot of volume yesterday, weaker volume today. We failed at the halfway mark. So I wouldn't be interested in that. Let me give you an example. This is the opposite of that. Yesterday on Etsy, we had a big, strong day, right? So it doesn't surprise me that the bar literally came very close to the halfway mark of that bar. If it goes back down there today, I will add my other half of my position. Okay, so does that leave anything for us at all? Let's take a look. General Electric, well, now it's above 50 RSI. MACD's positive. The only thing is that Tuesday morning there are earnings, and so it literally only gives us a one-day trade. I mean, this is very strong. It's very positive. I think there's a good chance that we can go up to here, but it's rallying into earnings. Let's make that a game last second decision. And then Intel, I am going to wait and be patient and see if we can get a close below the 100 and then back over the 100. So current positions. Yeah, we did hit our profit on Dexcom. Boy, what a trade, huh? All right. Etsy, I needed to go down a little bit more to get back in more SPY. Of course, we're going to buy SPY today. Okay, give me 1 second. These last 10 minutes, I have to kind of move things around the account. I can't speak as much, but after I get this taken care of, then if anyone has any questions, we'll do that after the market closes, right? Okay. So really the only question here today is whether or not we want to add General Electric to our portfolio today. Well, it is a strong day. It is a strong day. Whenever I'm not 100% sure on what I want to do, if I have conflicting signals one way or the other, I have found that making a half position makes the most sense for me. Because if it were any other day, I would be buying this for sure. It's just the earnings giving us just a very small trade window, but let's go ahead and do it. But only a half position. Okay, so what do we have? We have 7 minutes left, but yeah, I mean, it is completely legitimate. Higher low, we broke that back down below the 100, closing strongly above, taking out this range. MACD's positive, 50 RSI. Reminds me a lot of the Nike trade that we took. Let's take a look at that real quick. Okay. So, when we look back at GE, let's try to, compare these two. We have a strong move above a fractal. MACD's positive. RSI was between, just over 50, which is positive, and it was able to move up nicely. So if we look at GE now, it's very similar. Even better, in my opinion, because we had a higher low underneath it, back under, and then over a major moving average. Take out the fractal, take out the RSI, above 50, MACD went positive, strong volume. So yeah, so this looks pretty good. So we got 5 minutes left. I'm just going to go ahead and enter these positions in. And I am buying a half position on GE, which I will exit Monday morning.
Order partially filled.
All right, we got
Order
that
filled.
GE trade taken care of. Okay. We have this GE trade taken care of. All right. And then we're going to be buying our SPY at the end of the day also. Let's just go ahead and get that out of the way. And again, this is our overnight SPY trade.
Order filled.
All right, and then one more. All right. Well, that takes care of our positions. Oh, that felt nice and easy today. So let's take a look where we got filled on SPY. We got filled on SPY at 293.19. All right, so we got filled at 293.19 there. And then on GE, we got filled at 954. Okay, so our positions are as follows. Dexcom, if it were to close below 50, I would get out today, but it doesn't look like it's going to. Hit 3 profit targets, which is really great. Etsy, it's not quite low enough for me to add the other half in. I mean, that's almost exactly where I bought it, so I would have to have a better fill down into this range for me to add on a second position. SPY, we just got filled here at 293.19, so we will sell that first thing Monday morning. TLT, still holding the 50 RSI. It's 55 RSI now. We did hit 2 profits on that. VIX, we phased out of 36% yesterday, so it did move against us today, but luckily it's only with about 64% of our position. Nice to lock in profits on the way up, so if it goes down, not only did you make some money on the profits that you locked in, but it saves you money on the downside also. XLRE, we did buy this here. As long as it holds the 50 RSI, I am going to keep that. And then we also entered GE. Hey, look at that. We're in the money already. That's great because we got it at 950, 954. So that is about it. It's been good trading. I was actually looking at my record. So this will be the sixth trading day in a row that we've made a profit in the trading account. So 6 green days in a row is always certainly nice. I hope you've done well if you've been trading. And what do we have? We have about 10 seconds. Just want to make sure I got everything right. I did get everything. Well, it's too late now if I didn't, right? Because we have 4 seconds. So anyway, great trading day. It's been a great trading week. I do want to mention that I do offer private one-on-one coaching and mentoring sessions. So, if you feel like you'd benefit for some one-on-one teaching, I do offer that. I do it at nighttime via Skype. So if you're interested in that, my hourly rates and my contact information is in the description of this video. Let's see, does anyone have any questions for me today? Bruce says, I made back 12 cents on GE. Yes, I did. Yes, I did. I made a lot more than that. Multiples of 12 cents. Okay. Yeah, I will have a good hike. Does anyone else have any questions? I'd be happy to answer any questions that you have. While you're thinking about that, I really want to thank you for tuning in. I hope this is of value, what I'm teaching you. I've been doing this a long time and I do have a lot of experience, and I really do like to share it with people, to help their financial lives and give them a better grasp of trading. So if you did enjoy today's show, I would appreciate it if you could give me a thumbs up, or you can share this on social media or tell people about it, and so we can build our daily group. And if you haven't subscribed, I appreciate if you could go ahead and subscribe as well. So, okay, last chance on questions. Anybody have any questions? Come on, I explained it so well that no one has any questions. All right. Okay, well, listen, thanks again. I hope you tune in Monday in the last hour of the market, and we will do this all again. So on the way out here, we've got to do the U.S. government required disclaimer again. So thanks. I hope you have a really great weekend, and I hope to see you on Monday. Take care, everybody.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.